Something very interesting is happening in the housing market right now. Buyers are cautious, sellers are confused, and many homes are sitting longer than expected. But here is the big question. Is this a slowdown or the start of a new opportunity cycle? In today's update, I will break down what Redfin is reporting about buyer demand, home prices, inventory, and what this housing market mood really means for you as a buyer or seller in 2026. Stay with me because the data may surprise you. My name is Rizwan Pasha, and I'm a broker in Northern California, Mountain House. Let's start with the overall mood of the market. Redfin reports that the housing market feels uncertain. As we move into 2026, buyers are not rushing like they did in 2021 or 2022. At the same time, sellers are not cutting prices aggressively. So what does that create? A market that feels slow but not crashing. Now, let's talk about inventory. There are more homes available compared to the past couple of years. Inventory has been rising. That gives buyers more options. When inventory goes up, buyers gain negotiating power. It clearly shows more homes on the market. Compared to last year, more supply means homes are staying on the market longer. Next, home prices. Prices are not dropping sharply nationwide. Instead, price growth has slowed. In some cities, prices are flat. In others, they are slightly down. This is not a crash, it is a normalization. The bidding wars we saw during the pandemic are mostly gone. You will see price growth flattening compared to the sharp increase of previous years. Now let's talk about buyers' mortgage rates remain higher than what many buyers were used to in 2020 and 2021. That keeps some buyers on the sideline. Higher rates means higher monthly payments. So buyers are more selective. They are negotiating. They are asking for credits. They are taking more time to decide. This is a very different from the emotional buying we saw before. What about sellers? Many sellers still remember the peak prices from 2 years ago. But today's buyers are looking at monthly affordability, not just the list price. Homes that are priced correctly are selling. Homes that are overpriced are sitting. Days on the market has increased compared to previous years. Now, here is the important part. Even though the mood feels cautious, demand is not gone. People still need homes. Families are growing. People are relocating. Investors are watching carefully. This is what we call a balanced market, forming not extreme seller power, not extreme buyer power, but more negotiation on both sides. So what does this mean for you? If you are a buyer, you finally have options. You can negotiate. You can ask for repairs or credits, but you still need to act quickly on well-priced homes. If you are a seller, pricing strategy is critical. The first 2 weeks on the market matter the most. Overpricing can cost you time and money. Now, let's bring this local for Northern California, including Mountain House, Tracy, and the Bay Area. We are seeing similar pattern. Inventory is improving. Buyers are careful. Homes priced right are moving. The market is not crashing. It is stabilizing. Final thoughts. The 2026 housing market mood is cautious but steady. It is no longer emotional. It is data driven. It rewards smart strategy. And in this type of market, guidance matters more than ever. If you want a local breakdown for your specific city, whether you're buying, selling, or investing, reach out. I'll show you exactly how to position yourself in this changing market. See you in the next update.